Hello, everyone, and welcome to the Financial Advisors Want to Know podcast. My name is Catherine Tindall. I'm a CPA here at Dominion Enterprise Services. We are a specialty tax and accounting firm that just works for financial advisors. Today's episode, we have Hannah. She is a advisor that I got connected with after her episode on the Kitces podcast, and she's a financial advisor in Plattsburgh, New York, just outside of Adirondack Park. She and her partner, Andy, have been running an ensemble practice for 7 years and work with roughly 350 households. When we got connected after I had listened to her episode, we had a conversation around adoption and foster care. And I was really interested in bringing her onto the show to talk about, how advisors can negotiate specifically adoption and foster care questions that they might be getting from their clients, because it's an area that, unless you've dove into it before, you might not realize that it's actually a lot easier and more beneficial than what clients might be realizing. So thank you for joining me on today's episode, Hannah.
Yeah, it's absolutely my pleasure. Thanks for having me.
So for this topic, I guess for most advisors, this is something where a client mentions that they might be interested in pursuing adoption or foster care. How do you usually open up the conversation, and what are some common misconceptions that you see clients have or advisors have, kind of when starting the conversation?
Sure. So it's perfect because when I brought it up with you, you said, "Oh yeah, I've heard that's really expensive." And it was kind of
Mm.
this thing to navigate around and trying to avoid the expense of it. And so I love when clients bring this up, and I love when advisors are knowledgeable about this because um, I think when you're starting any family, one of the big considerations is cost and taxes and all of that. And so you as the advisor can really empower somebody to pursue something that can be life changing for them. That's kind of what our work is all about. My knowledge comes because I was a foster parent before I was a financial advisor. And as I started my career, we were also starting our family and navigating the foster and adoption system in New York State. And so, what I'm excited to share today is that a lot of these rules are federal that I'm going to talk about. And um, again, just advisors knowing a little bit and knowing what questions to ask can really help empower that client to explore this a little bit further.
Yeah, that's great. So where do you usually start?
Yeah, so I kind of started the same place that people are starting this journey in foster care. As a foster parent, generally in most places, you would be getting payments to help support that child. Those payments really get treated almost the same way as child support does from a federal income basis. And so they're not taxable and they're not even reportable. So if that's kind of a consideration, yeah, it's great that they'll pay me, but what kind of a headache will it create? It won't create one. It's support for the child. And so that is just a non-issue. Those are non-reportable income. The next is just what other kinds of costs might I be incurring? In most places, definitely where we fostered, childcare and medical expenses are covered by the state. So when you have the two greatest expenses you can have as a parent being covered, that goes a very long way towards making this a feasible dream. And again, that's support for the child, and so that's not taxable or reportable at all.
Mhm.
Um, and then we kind of get into more of the tax return type of items. So even while a child is in foster care, if they're in your home for half of the year or more, then they're counted as a dependent just like any other child in your home. So very much the same way that you would think of the custody rules regarding claiming a child is the same in foster care. That can certainly help. All of a sudden, you have another dependent on your return, and all of the child tax credits, child care credits, all of those that go along with it. The one that is really kind of misunderstood and can really tip the scales in terms of whether this is feasible for some families is the adoption credit. So the federal government has a tax credit for adoptions, and when you look at it on its face value, it talks about reimbursable expenses and legal fees and all of that. And that's all true. The rules are different depending on whether it's a domestic or a foreign adoption, and things like that. But if you have what's considered a special needs adoption, then you can actually claim that entire credit, whether you had the expenses or not. And it's a credit, it's not a deduction. So um, when we talk about what a special needs adoption is, when you hear that, you probably think a child with a disability. That's a fair interpretation. The IRS has a different interpretation of what that means. And so, for IRS purposes, looking at this credit, when they say a special needs adoption, they mean that the state has deemed this as a high risk adoption for some reason. So, that can be anything from the time the child was in foster care before, or the age of the child, or moving across state lines. There's a whole litany of reasons why the state might consider it a special needs adoption. So that's something that I think most people do not understand. Even after adopting, they still don't understand that they can claim all of that. And then using that kind of same definition as a special needs adoption, sometimes the payments that you get can actually continue all the way until the child's 18 or even older. So again, it's a lot like child support that you're getting. And instead of it being from another parent, it's from a state. So that often will continue, and those payments are also tax-free and not reportable. So from a financial planning standpoint, when someone's asking you, hey, what do you think of foster care and adoption? I just think knowing those things, knowing that there's actually great benefits built into our tax code for that is huge, because that might just open the door for someone thinking more about it.
Yeah, absolutely. And I wonder, for a lot of, I haven't had this scenario come up, but if you can be made aware of what the rules are, I'm sure some of these things can apply when you have, okay, maybe I can be participating in this system, but for someone who's a family member rather than, someone who's maybe like a complete stranger. Like if you have a situation which is becoming more and more common where I haven't had to deal with this on the client side myself, but I've encountered this scenario often where maybe you have another family member who's got a drug addiction, or they're not
Mhm.
capable of caring for children for whatever reason.
Correct. Yeah.
But you want to be able to keep those children kind of within the bigger family network, and so being able to adopt them, if it's an older parent or a cousin or
Yep.
another sibling, being aware that there are these kinds of programs that you can, depending on the situation, participate in to help reduce the legal costs, to get
Definitely.
these credits, get these benefits. If you can get support in terms of the health coverage and
Mhm.
things like that, knowing what the federal programs are, and then in particular, depending on where you are on a state level, there's also, most states have programs that you can participate in as well. But it doesn't need to be limited to a complete stranger, or
Yeah.
I often see this, not that I've had to deal with it directly, but from other practitioners and just, personal situations, seeing that people have been able to do this where, it's another family member and kind of helping correct a, dysfunctional family situation, and not being, I've had some where it was, a grandparent adopting grandchildren because their children had drug abuse problems, and they were able to have the children, but then also get support from the state, and participate in some of these federal programs, so that even though they were on retirement and on a fixed income, they were able to make it work financially. And then we're able to kind of keep the children within the family. And then best case
Right.
scenarios, some of the kids were able to get help and go through rehab and still, meaningfully participate, in a
Yeah.
healthy way. Yeah.
Yeah, those kinship programs are becoming more and more common, and if you think about what's best for these kids, in most cases, somebody who they already know and trust is the best scenario. So, I would say that in those cases where you're not going out as just a foster parent per se, but there's a more specific case in mind, that's when it's especially important to coordinate with people who understand the rules, and make sure that you're going about it the right way, not just from a financial or tax perspective, but a legal perspective, and making sure that that's going to be supported by the state. So, absolutely, those programs shouldn't be overlooked. And um, the a lot of the direction around the foster care payments actually is directed at grandparents, because that is happening so
Mhm.
often. So as professionals, whenever we can kind of be armed with this knowledge and help people explore what's out there in a non-judgmental way, I think that
Mhm.
it really gives us an extra layer of value, and we can be that kind of consultant to these families.
Yeah, and I would say maybe something else I'd love to hear you speak on this for advisors is, okay, so you have, say, a client that comes in and they're now realizing that they might have to be caring for a grandchild in a way that they didn't really budget for. They weren't expecting this. Um, what's the process that you recommend an advisor take them through in terms of what other professionals do they need to get, in their corner?
Mhm.
What kind of projections and forecasting do we need to be doing? For an advisor where they have a client coming to them with this kind of a situation, what's been
Yeah.
the process that, you would take somebody through?
That's such a great question. And I think the most important thing, if they're a grandparent, they've been a parent before, we would think, right? So the first thing is just recognizing that it's not going to be the same as it was the first time around. They don't have the same energy, they're not in the same place in life, and they can't give the grandkids necessarily the same time frame that they were going to give their children. And so just helping the client realize that this is different and you need to approach it with an open mind and kind of start from scratch again. Yes, you know how to parent, but let's go back and see what else we need to put in place this time around. And then the same advice that I give anybody who has their life change unexpectedly, which happens all the time, is um, whatever work we can do to kind of let go of what projections we had before, and
Mhm.
start with, here's where we are today. If I was coming in and we were meeting for the first time ever today, tell me about your life. Like, let's not hold on to what I thought would happen.
Yeah.
And then definitely pulling in all the resources available and not leaving things on the table. I see this a lot where people have too much pride to take the help that's available to them.
Mm.
And what I try to remind people of is that it's really not for you, it's for these kids. Like, we want you to be in the best situation possible for them. So that
Yeah.
usually helps people kind of put that to the side and start to look at everything that's out there, all the help, whether it's financial or just time, expertise, whatever it is, and kind of get them going in the right direction.
Yeah, that's great. And I think especially something that I encounter sometimes with people, especially if they've been, had very productive working years and are put in a situation like this where they're now having to, they now have the option to receive some support back from the state. And for a lot of them, like you said, it's a pride issue of like, oh, I don't want to take from the system. Like, I'm a giver, I'm a producer. And I always have to kind of walk people back a step and say, like, you've been paying into this system. Like, you've been paying it forward. You've been supporting other people to do things. And you've, to the best of your ability, you've been providing into this. And so now that you have the opportunity to take advantage of the system that you've been paying for, take it. It's
Mhm.
because it will allow you to have that, like you said, like a cushion and a level of comfort where you're going to get a better outcome for the children and better resources for you to be able to do a better job. If you're able to get some part-time help with them, because like you said, you're not going to have the same level of energy that you did. And maybe you
Mhm.
need a couple of days a week where you have a babysitter or somebody that's coming in to help you, and you can get some support to finance that. So it's going to be more reasonable. Like, I wouldn't poo-poo those kinds of things. And I think as advisors, knowing how to approach that conversation to help a client advocate for themselves of like,
Mhm.
no, you do deserve this. Like, you do deserve the help.
Definitely.
Like you don't have to be like, you already are the hero here, but you don't have
Right.
to
And this
die on your
doesn't
sword,
mitigate
right?
that.
Yeah,
Yes.
it's like, so let everybody else, help with that in terms
Mhm.
of getting the right resources for what you need and being able to take advantage of these programs and take the tax credits and really get a little bit of reward for the hardship that you're having to deal with, for the fact that you've been so consistently helping.
Right.
So
I completely agree. Well said.
so any fighting like final thoughts that you have for advisors who might be dealing with the situation for clients, things that you've seen work well, or resources that they could get, that they should be looking for in terms of, have it being in a stronger position for these kinds of conversations?
For sure. The first I would say is look for other people who have just gone through the same situation or similar as you, because the rules do change often enough. And sometimes it's a matter of finding the right professional at the time or the right social worker or judge or whomever. And so ask for other peers that can kind of guide you through their story and figure out what's next. And then the next, as a professional, is just to understand that these families are often going to be overwhelmed and stressed. And so if they're not communicating well or it's hard for them to make meetings, just try to be patient with them and meet them where they are, and ask what would be helpful. Is it more helpful if we go someplace where your kid can also play to talk, or whatever the case may be? Just kind of try to meet them where they are.
Yeah, that's great. That's great advice. So as we wrap up the episode, for people who want to get in touch with you, other advisors or people facing these issues, I have lpfinancialadvisors.com, but what are good places for people to connect with you, Hannah?
I have to be honest, I have focused so much of my time in the last couple of years to in-person and one-on-one interactions. And so contacting me through the website is probably your best bet. And I'm very happy to field questions other advisors have if I can. So please feel free to get in touch.
Yeah. So thank you so much for joining me. And for those tuning in, we'll have the links of where you can get in touch in the show notes. And I just want to thank you again, Hannah, for coming on and talking about this topic, because I know for myself, not having dealt with it a whole lot, it's definitely a space that, people don't realize what kind of benefits you could be entitled to. So thanks for your willingness to come on and talk about it.
It's my pleasure. Thanks for having me.